We have one IT company joining us now. In fact, Mastek, the first corporate that we're speaking to this morning, the company, remember, signed a strategic partnership with Netail to bring AI-led digital transformation to the retail and consumer industry. That's the buzzword as of now. So to understand the potential from this deal and what the outlook is, we're joined by Ashank Desai, the Vice Chairman and Managing Director at Mastek. Ashank, thanks a lot for joining in. Can you tell us a little bit about the details of this partnership? And, what would this mean in terms of revenue contribution? Any kind of revenue share that you're looking at? How will this boost your retail business?
Yeah, Sonia, thanks for the invitation. Thanks to be here. As you know, Sonia, we have been focusing on digital marketing as a major segment of our business. It accounts for 22% of our business. And on that, 15% is a retail business that we have. That means retail digital marketing. We have been doing it through Oracle relationship that we had on digital marketing and now Salesforce. We acquired this company MST, which is focused on Salesforce. And both of them are giving us a big boost in the retail market. Now, what's happening in retail market is almost complete change in consumer behavior in terms of how they buy. 90% of them go through a search engine and they look at all kinds of prices and so on and so forth. So our customers are looking for something beyond digital marketing from Salesforce and Oracle that we already have. And this Netail is exactly filling that gap. What it does is it looks at search data, it looks at competitive data, it looks at pricing, and not only gives you information, what it gives you is recommendation based on AI. And they have seen that as a big boost to their retail consumers. So when we go with them, we will now have a better offering in digital marketing space for our customers.
So
Which means
Sorry, just to understand how the retail business is functioning at the moment, I think in Q3, retail was up 7%, but on a quarter-on-quarter basis, it was down 8%, if I'm not wrong. So there were some furloughs as well, quarter-on-quarter, that you had to face. So just trying to understand, in retail particularly, have you seen a ramp down or a slowdown as far as deals are concerned?
Can't say specifically retail versus other sectors. There has been delay, obviously. The decisions are getting delayed because customers are now looking at whether they should do more offshore versus less on-site, and obviously some worries about recession and so on. So there is a decision place today, and that is true for all. So I won't say retail is the only place where there has been a delay specifically.
Okay, all right. Hi, Mr. Desai. Good morning. Quarter three was a little bit softish for you on the organic front. If you include the Metasoft acquisition, then there was some growth. So tell us, how is quarter four shaping up? Do you expect some growth first organically, and what about including this acquisition as well?
No, this is not an acquisition. This is a strategic tie-up.
No, I'm referring to Metasoft, sir. Metasoft, organically, how are things shaping up since quarter three was slow? So how is quarter four shaping up? And if you're giving us for the consolidated entity, then including Metasoft, how is it shaping up as well? Go ahead, sir.
As we said last time, Metasoft business is doing quite well. In fact, better than what we thought. Not only that, our Salesforce business is growing fast because of Salesforce own initiatives in US, but it is pulling us in UK also. So that side of business looks quite good. On the organic side, as we said in our calls, we have focused now to look at various components that we initiated during last 2 or 3 quarters. And the results we are looking forward to see in this quarter. Obviously, we don't give any guidance, as you know. So it's difficult for me to talk about specific numbers, Nigel. But the point is one engine, which is organic side, is also now we are focusing on moving up.
Okay, all right. Okay, Mr. Desai, I wanted to ask you on 2 aspects. One is margins. After 7 quarters of decline, there was some stability in the past quarter. So that's good news. What is the margin band should we be working with from here on? And also, attrition has cooled off quite a bit. Worst of attrition behind? Any kind of number you could give us on attrition and margins?
See, as far as attrition goes, it is going down, but still, to be honest, not going as fast as we would like to have. It is going down, but we are looking forward this quarter again. There will be fall over last quarter. However, I think the speed of attrition has to still go down faster. Hopefully, we are looking at next year. The attrition will come back to the normality is what I'm hoping for as far as attrition goes. And we have talked about EBITDA margins in the range of higher teens or moving beyond the higher end of the teens, and I think we will retain that. We had, of course, higher than that EBITDA margins in the previous year, but we feel that we will maintain what we have talked about in our guidance and the investor call after the results in Q3.
Okay. All right, Mr. Desai, we leave it at that. Thanks a lot for joining in, and hopefully things will improve the next time we speak. That's Mastek talking about the recent partnership. But I think what stayed with me is their comment that decisions are getting delayed as customers are worried about recession. So that seems to be the problem area for the IT space. Let's slip into a quick break.